Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. In today's episode, Anthony Power and I are joined by Kevin Dede. He's the Managing Director and Senior Technology Analyst at H.C. Wainwright & Co. He's been involved in the crypto and Bitcoin mining sector for a number of years, and we wanted to get his expert Wall Street opinion on the sector. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below what you think of today's discussion and if you're currently holding any of the miners we talk about. With that being said, let's get into today's video. Okay, you guys, today's podcast, a very special guest. We have Kevin Dede. He's the Managing Director and Senior Technology Analyst at H.C. Wainwright & Co. Now, Kevin, we had the pleasure of meeting down in Fort Lauderdale at Mining Disrupt. We were on a panel together down there. We threw around the idea of a podcast. We figured it's high time, earnings season, and obviously some big numbers in the mining sector. So thanks so much for making the time. Great to see you again.
Well, thanks for having me, Bryce. Anthony, appreciate it. It'll be fun conversation.
Yeah, this should be a good one. We're looking really forward to getting the Wall Street perspective. Obviously, we represent kind of the retail grassroots investment community, but the institutions and Wall Street have really taken notice of the Bitcoin miners, specifically as part of this HPC AI transition. So this is going to be great to get your view or lens on the space. Before we get into that, though, can you talk to us a little bit about what led you into the world of finance or institutional research and ultimately into H.C. Wainwright as a Bitcoin analyst?
Wow. Okay. That's going to go back some decades. In the 80s, I was working for a bank, and a friend of mine pointed me to Larry Eckenfelder, who was financial services analyst at Prudential Securities in San Francisco. I'm a San Francisco boy, lived there 45 years, just recently moved. And so I got a job as a junior analyst working for Larry, and that was great. And then worked through a couple other firms and ended up working for John Merriman with a steady focus on technology. And then there was a big disruption, obviously, in '08. And I started working for, I think there was 1 year there that I may have been at 3 separate firms. Always covering technology, but the financial industry was so tumultuous at that point. It was hard for companies to justify a full set of analysts. In the past, analysts would help drive trading revenue. Like in the 90s when I started, or in the early 90s when I started, my boss Larry, I think we're getting 12 cents a share. And pretty much every trade had to go across the wirehouse desk. We were a wirehouse. There was a lot of money to be made because there were huge spreads too, right? Because trading was fractionalized. Now we have fair disclosure, we have decimalizations, we have electronic exchanges, and the whole industry has changed night and day. And trading is much more difficult to generate revenue on unless you're a really big firm like Goldman or Morgan Stanley, at least on the equity side. On the bond market side, it's completely different. So the money in the equity side is really in investment banking. And that's one of the things that attracted me to H.C. Wainwright. I knew one of the senior execs there, Craig Schwabe, because I had seen him at the AAA conferences back in the early 2000s. And a job offer came, so I took it, and that was I talked to them, I think, in early or late 2013, and then started with them in 2014, covering sort of as a special sit guy, anything that sort of looked like it could be an opportunity, not just for research and stock performance, but also as an investment banking opportunity. And then in 2018, early 2018, the guys at Riot Platforms held an analyst meeting, and it was in Oklahoma City, where the company, as we were talking to earlier, had just recently converted from a biotech platform to a sort of an empty shell that Barry Honig and John O'Rourke kind of took control of to turn into a Bitcoin mining company. And they started building out this facility in Oklahoma. I think it was an old Sprint or some other telecom warehouse. And they opened the big barn doors, and they had racks from Costco, and they had a guy in there, a team of guys in there, putting in like 8,000 old S9s. And the idea was to get, I think, 8,000 in that fleet up and running through that summer, which they did, I think, if I remember, in 2018. But it was hard. It was really, really hard to run. Bitcoin, hit a high in the end, at the end of 17. I think it went to 17,000 or 21,000. I can't remember exactly, but 2018 was a tough year. And Bitcoin price sank, and Riot's performance wasn't that great. And by the time the end of 2019 rolled around, it looked like the company might go out of business. My colleague on the banking side, Craig Schwabe, was able to orchestrate a deal. And I think I may have mentioned this to you guys. He basically opened the institutional market from the very get-go, because in those early days, institutional investors didn't really want to touch anything that had to do with crypto. Though the regs were so loose, it wasn't clear where the SEC stood on things. It was almost like cannabis. So he structured a deal. He found investors, as he's great at, but I think he had to get the stock cleared through a brokerage firm in South Korea or Japan. I can't remember the details, but that's how hard it was to get deals done. But he opened the floodgate because, obviously, as you guys well know, this is a capital-intensive business. So we continued to do work for Riot, and then we started doing a lot of work for Merrick Okamoto as the CEO of Marathon at the time, before Fred came in. Bitfarms, I think we raised money a little for Hut. You can go down the list. Argo, pretty much every Bitcoin miner we were involved with in the early days. The thing that was really, really intriguing was Riot's analyst meeting. Now, John O'Rourke's a brilliant guy, absolutely brilliant. That's how Jason got on the board, because they used to be poker players. Jason was a big poker player, and that's how John knew him, from poker. So we said, hey, Jason, I know you love this Bitcoin stuff. Come and join our board. So we did. But he didn't really get involved until after the Jeff McGonigal era. But anyway, the thing that I think really, really intrigued me was his savvy, not just in crypto and Bitcoin mining, but in semiconductors. And semiconductors, I think, for those, and I'm sure you guys know and your audience well knows, semiconductors is the key to this business. Semiconductor development is what drives mining efficiency. And that's the key. And at that time, now I had spent, given 25 years at that point it was 30 years in technology, I'd covered plenty of semiconductor companies. And I realized exactly what John was saying. He knew that the S9, I think it was on a 14 nanometer chip, was going to be replaced by the 17 on a 7 nanometer chip, and you would be off to the races. And he could see all that happening. So I thought that was incredibly impressive, because I've seen plenty of CEOs where their technology is definitely a function of semiconductor improvement, not really understand it that well. The other thing that was really intriguing about what O'Rourke presented was the fact that Bitcoin mining was going to be a key aspect of Riot's platform. At that time, it was Riot Blockchain, but not the exclusive one. He had a 13% ownership in CoinSquare, I think, which is now part of WonderFi. And the idea was that he was going to have to take that, or was hoping to take that technology and develop a trading platform so he could compete with Coinbase and Kraken. And that's where he really wanted to go, because he understood even in his study of Bitcoin, that it was secular and difficult to drive consistent profit that you can sort of draw out on a cash flow basis to figure out a really good asset valuation. Anyway, that's what really attracted me to Bitcoin mining, was really O'Rourke's diverse view. And then obviously I started talking to everybody. I started talking to Wes Fulford, who was the CEO of Bitfarms at the time. And he introduced me to Ben Gagnon, and that was in 2019. And I was very impressed with Ben, and he's been a great buddy ever since. And then obviously talked to Merrick. I went to go see the site that he built in Hardin, and ran in. This is the crazy part that people don't recognize. The same guys that built Riot's site in Oklahoma built the Hardin site. Anyway, let me turn it back to you guys. If you've got anything you want to expand on, let me know. Happy to chat.
Yeah, that's an interesting introduction, and I'm assuming suppose like the way Galaxy now have an offering an exchange as well as Bitcoin mining, as well as a number of other products. Is that the way that he was expecting Wright to go down that route as well?
Well, I don't know that he had designs on sort of the investment banking aspect. I think Novogratz wants to look at crypto and become sort of a broad-based investment bank focused on crypto. I don't think that was O'Rourke's intent. I think he really wanted to mimic the growth he saw at Coinbase and Kraken, even in those early days.
Yeah. I mean, going back to I'm an accountant by background, and two of my favorite films are The Big Short and Margin Call. And obviously, people who watch them films and have gone through that sort of the 2008 and 2017, all these issues have this sort of probably this bias of what they expect an analyst to be like. So, can you sort of talk us through it, from today's point of view? What's a typical day like for you? How do you feel that day? In a normal day.
Yeah. Oh, well, that's one of the great things about this job. There's never a normal day. When I worked at a bank, you could pretty much go in and it was modus operandi day to day. And I mean, things would change up on a quarter when you had to. This was in California. You had to prepare a bunch of financial reports every quarter for the banking regulators. But I would encourage you, Anthony, to add Wall Street to your repertoire of good movies, because to me that's like Michael Douglas is standing out on Long Island with the old block cell phone, and then they're putting deals together. So I like that one too. So day to day, I think the big thing is just checking emails to see what some of the covered companies that we're looking at have offered in terms of news. And that is a pretty big signal on how busy things are going to be. And then sometimes you get sort of a reboot of that same thing at between 4 and 5 p.m. Eastern time, because a lot of companies will announce things after the close. So you've got two sort of really exciting times, sometimes spaced out with absolutely just, banging on a keyboard, trying to get some thoughts on paper about how you think particular companies are going to perform.
That's great. Hey, and kind of an extension of that one, with so much going on in the tech space, specifically you being a senior tech analyst in the midst of an AI revolution, how do you even sort through or find potential companies to start your research on?
Oh, that's a great question. That's a great question, Bryce. I don't know that there's one simple answer to it. I think one of the things that I've always looked at, and I mean, even when I was the first person to pick up Riot and Bitfarms and Mara and all those companies, I think the things that impressed me were how well the senior management team embraced technology, how they looked around the corner to see how they could position their company to exploit the evolution, right? So if they sort of see how the course is going to go, and they make a bet on, and we were talking about Merrick before, right? He made this huge bet on where he could go with that and bought, I think, 70,000 S19s, and that really vaulted that company into the stratosphere. So those are the kinds of things that I think are really interesting. It boils down to the risk appetite that senior management has in the face of how well they think they can navigate technological change. And specifically with HPC and AI, we recently picked up CoreWeave. Now, our focus has always been crypto. It really has. Well, not always, but since maybe 2020, I think in 2020, we initiated maybe on 20 different crypto companies, from Diginex to big digital assets and a whole assortment of different companies. But the key, I think, or at least in what we saw in CoreWeave, I think really addresses your question. That company, if you look back at just the past 2 generations, cutting edge generations of Nvidia modules, CoreWeave was the one that was entrusted by Nvidia to deploy them first. And I think that says volumes of trust in that Nvidia has in CoreWeave's networking software. Well, that's really the key when you start talking about AI. There's a zillion variables, and different AI HPC configurations can be constructed to meet specific AI demand. And the flexibility that CoreWeave brings really serves the AI side of development. There are other companies like Bit Digital. It's working with a company called Boosteroid that's doing cloud gaming. That's really a lesser scale of GPU operation. You go back to Hive's origin, they were, you guys well know this, they were an Ethereum miner. Yeah. And that was all based on GPUs. And I can't remember who preceded, I think it was a guy named Harry who preceded Frank as the CEO. And they were sort of stumbling around trying to figure out how to go from like the 4 to the 8 generation and GPU to sort of accelerate their mining. They had a great CFO. Her name was Jessica Van Arken or something like that. She super sharp. I kind of wish she was still in the crypto space, but she was really good. But anyway, I think those are the things that I look for. I look for a company that has a sizable risk appetite and is looking at technology evolution and what can articulate an avenue to exploit it, if that makes sense.
Yeah, absolutely. And you mentioned CoreWeave there. Well, that was one of the questions we're going to cover today, and all 3 of us were fortunate to be on a coach going from Dallas to Denton just over 12 months ago for the announcement of the first 200 megawatts of that deal. And me and Bryce were very privileged. We were in the audience there with about 30 or 40 of you Wall Street guys. We felt we were the fake people in the audience, but we asked a few questions, and it was great to be part of it. And we started to see that contract build from the initial 200 megawatts all the way up to the 590 megawatts. And literally just over a month ago, the Core Scientific share price was around about the $12, $13 mark. And then the rumors came out that there was potentially another offer coming in for the company from CoreWeave, and the share price shot up. And then a week later, we saw this announcement of the deal. And initially, if you just look at the big numbers there, $9 billion. Well, Core Scientific at the time was valued at probably just above half that amount, getting close to $5 billion. I think it touched $5 billion before the announcement. And we've seen that deal sort of like drop in value day by day since that announcement. So over the last month, It was on a sort of like effectively a floating CoreWeave share price, which was originally $165. I mean, CoreWeave today, I don't know, it could be in the low hundreds, $106.
Yeah, 108.
108. So, slightly higher. I think it was 106 yesterday. And so that effectively means nearly, 50%, wiped off that deal. That deal's now valued in the 5 billion range. And so, now this, obviously the board have agreed in principle, but the shareholders have the sort of like the casting vote. How do you see this playing out from your experience of seeing these type of deals happen before? And when you look at the likes of, I think it's Vanguard and some of the other big institutions have significant size in Core Scientific. How do you see the voting situation going from some of the, what if they've got a foot in both companies? I mean, I'm sure shareholders will think, I don't really want to deal at 5 billion. I'd rather have the deal at 9 billion where I was getting a reasonable return for my shares. Now it seems like I'm giving away my shares. And there's no certainty as to how CoreWeave's going to do. This is still early days, and the share price has already rallied from $40 all the way up to 100. Well, it was higher than $165, but it's obviously come back to 106. And the founders get to sell their shares in literally just over a week's time when earnings is announced. And does that put pressure on the price again? Just give us an overview of what your thoughts are on that deal and how you see potentially it could play out between now and the end of Q4.
Yeah, that's Anthony, I'm just one guy. I'm one guy with one opinion. I appreciate being flattered at having you being able to discuss these things with you. I do really appreciate that. I'll tell you that there's still a lot up in the air, and there are a lot of variables. As far as I understand, there's some activists involved on the core scientific side that, to your point, would really like to see a higher value than the fixed ratio, which is 0.1235 CoreWeave shares per core scientific share. So, and there were no collars established on that. And I think that might have some people a little upset. On the other hand, if the deal goes through, regardless, putting pricing aside, the deal goes through, Core Scientific shareholders now own CoreWeave. And CoreWeave owns Core Scientific. If you take a step back and just look at it from a technology perspective, owning Core Scientific is going to give CoreWeave so much more power in the ability to find sites, develop sites, and integrate sites. That's something that is not part of their core competencies, but is clearly a Core Scientific competency. And I appreciate that you referenced that June analyst meeting, right? On one hand, we see Core Scientific jumping head first into AI. On the other hand, we see Riot going, no way, not for us. But keep in mind, though, that wasn't new. The guys at Core Scientific had been working with CoreWeave probably for a good 18 months, maybe 2 years in advance. They were running 16 megawatts somewhere in Dallas. So
but also they were the data center that they hosted the Ethereum mining. So they had even a longer relationship with Core. This isn't something that came out of a, they've got like a 4-year relationship with the company.
Right. They knew, each team knew each other very well. And so anyway, back to some of the technology perspective, right? So CoreWeave will end up with this incredible skill set, right? And huge cost savings. So it's kind of hard to imagine they're not really all in trying to get this deal done. I don't know if that requires some renegotiation. Maybe that's what it takes. Time will tell. You're right. The initial holders of CoreWeave are going to, there could be a huge influx of liquidity, but also, to your other point, CoreWeave reports earnings, right? those numbers could be pretty impressive. All right, we saw them. I think just the other day they spent $322 million to buy another data center in New Jersey. These guys, to my point about risk appetite, there's I'm incredibly impressed with the way that they've been maneuvering. And geez, the Galaxy call talked about how CoreWeave wants to take the full Helios site. I don't know if you ever visited that one, but that was pretty incredible.
No, but I dealt with Argo in the early days, and Peter Wall and Alistair, the CFO there, and I had a good hour's podcast with them one day to go through their debt issues back in 2022, and they said, "Oh, we haven't got a problem," and I said, "You have got a problem, and it's gonna come back and bite you." Because as an accountant, one thing I can do very quickly, I can calculate interest payments, very, very quickly. And I said to him, I said, I know what your interest payments are going to be for this year and next year, and you haven't got that cash coming from Bitcoin. And they looked at each other and they said, well, your interest payments are correct, but we think we'll be able to manage. And well, now we know the history of that conversation. But right. 4 months later,
well, they weren't alone. Core Scientific ran the same problem.
Oh yeah, Bitfarms were very close to that. They had $160 million of debt, and they effectively drove that down over a period of about 18 months down to zero. I mean, They sold the kitchen sink to get that down. They changed, I think they probably did it at the most opportune time. If they'd have left it longer, they'd have probably gone into the same position that Argo are in. And bear in mind, Argo had to sell that facility at Helios 7 months after it energized. Yeah. 7 months. Look at what's happened with Galaxy now. If they could have just held on for a bit longer and utilize that power in towards AI in the future, whatever like that, it could have been a whole different ball game. But there is a lot of mistakes across every mining company. I can sit here all day and talk about the strategies or the mistakes. And bear in mind, you've already highlighted it. This is a new industry. This is effectively Hive's the oldest Bitcoin miner, 8 years old, and many of the other miners we talk about are a fraction of that.
Right. Exactly. Also very capital intensive. I mean, your point to Argo maybe being able to stay that fight, perhaps, but it just takes a leg in the capital markets in order to make that transition, which is put Core Scientific in a very unique spot, right? Because their deal was hinged on CoreWeave sponsoring the construction, which is a huge, huge thing. Applied Digital's gone through the same sort of situation, right? They had a few near misses with some good clients, but they had to arrange financing. And it's been, they were on the verge of insolvency at a couple of points because it's very difficult to tell. The great thing for them is that they had consistent cash flow coming from Mara as hosting, Mara's machines. But yeah. I think as far as the deal goes, I think it'll be a time will tell. A lot of variables, very hard to anticipate how things will shake out. We could see CoreWeave stock flying again, right? That's not out of the realm of possibilities. Yeah. The other side of it is Core Scientific is not being looked at as a Bitcoin miner anymore. I mean, Luxor's forward hash price curve, it shows a pretty big dip, but doesn't really matter to them.
Yeah, makes sense. Hey, on the topic of CoreWeave and some of these newer companies that you guys have initiated, specifically in newer industries, as you said, you were kind of pioneers in the crypto space. How do you go about setting price targets on these specific companies? Anthony and I often talk to each other. Sometimes we'll see price targets that get upgraded that are below the current price. Sometimes they'll be way farther away than we think is realistic. How do the big banks go about doing that?
I don't know that there's any set rule. I can tell you what goes into the calculus of my thinking. But again, I'm just one guy. There are, a lot of analysts out there. You guys talk to them too. So a lot of it boils down to where the stock is now and its recent trading history. and how the valuation parameters that you assign or that you use to monitor it, how they track the industry. There's some companies that just seem to be discounted. I used to cover a bunch of companies in Israel, and because they were in Israel, there would be a discount relative to their peers in the US. Just a matter of fact. I think Bitfarms suffered that for a long time too, right? Bitfarms would never see the valuation accorded to Mara or to Riot. CleanSpark came up pretty much out of nowhere and all of a sudden started garnering that kind of valuation as well. Bitfarms didn't. So when you look at different stocks, you've got to consider where the company fits in the industry, how the stock has traded in its history, what seems to be a reasonable approach. I remember covering Qualcomm, and this is in 1998, and Walter Piecyk came out, I think sometime in 99, with $1,000 price target on Qualcomm, and Qualcomm, I don't know if it was trading even close to $100, but he wanted to throw a big banner out there. Hey, I am the champion on Qualcomm. It's going to $1,000. So there are analysts that do that too, kind of showboaters. And my rationale boils down to a conservative view of hash price, which is a combination of the network and Bitcoin price, right? So conservative view of hash price, because those are variables we have no control over, right? So you got to look at that and then try to work out some numbers going forward, and then accord a multiple that is reasonable in light of where the stock's trading and how it's traded in its history. And I think that's probably the fairest way to do it.
That's a great point to raise there, because that leads on to the next question. In terms of, I mean, obviously we've looked at the Bitcoin mining industry for the last, 5 or 6 years and seen these miners develop from them really low hash rates to, quite a few now, over 50 exahash. And, you mentioned multiples there. In terms of these companies now, and we've just spent quite a bit of time talking about Core Scientific going down the HPC co-location route, and other miners, many other miners are looking to try and snag a deal anywhere near as good as that Core Scientific. None have managed it yet, but a lot of trying to, and it looks like that seems to be the best return on investment for power going forward. How do you sort of look at the mining industry and provide a multiple, and what multiple would you give the mining industry compared to miners that are looking now to move into HPC, which from my perspective looks to be a more predictable model in terms of revenues, costs. I couldn't say what the Bitcoin price is going to be tomorrow, Kevin. I can't say it's going to be next week, and I certainly can't say what's going to be next year. I hope it's going to be higher. But it's hope. Opium doesn't get very far.
Nope.
But
when you sign a good way to run a business.
When you sign a 12-year contract for $850 million a year, and you know that your costs represent about 25% of that, you know you've got a great contract, and that's a contract. And yes, there'll be some sort of minor clauses in there if you don't perform, so performance clauses, but you know over that period you're going to deliver those types of revenues. How do you sort of assess those two industries, and what multiples would you apply in general terms to each?
Okay, fair question, and an important one, and maybe part of the difference between accounting and finance, right? And finance, it's all time value of money, right? And how to value an asset, right? And the standard rule in business school is, hey, look at forward cash flows, discount them back, right? You can, to your brilliant point, that's what you can do with HPC and AI. Everything is completely transparent. There's little ripple to see. The transition, I think you'll see, as many of these companies will end up as REITs, because it becomes a real estate play.
Yeah.
So from that perspective, it's you would think it would be easier, but geez, we looked at a lot of these neo clouds when we were looking at CoreWeave, and valuations, there are a lot that are all over the place. It's really, really difficult to say. I think the same can be said for the Bitcoin miners, right? We made the point that there are differences depending on location and perception, both institutional and retail. I think when you start combining things, it becomes even more cloudy, right? Because you're not sure what bucket to put a company in. And that's what happens on the street, as far as I can tell, right? I mean, a lot of guys like to, write up some of the parts, but I don't think stocks really trade that way. I think a lot of analysts, both on the sell side and the buy side, can figure out, where or what a stock should be worth, but how the stock actually trades and those some of the part calculations, boy, I've seen more divergence than I've seen convergence in my 35 years. So to get to the meat of your question, with Core Scientific's pretty easy, right? Because they're looking at becoming an AI HPC company, right? No longer a Bitcoin miner. So that's clear-cut case. When you start looking at IREN or Cypher or Riot for that matter, it becomes a little bit more difficult to sort of sort out how you think that stock should be valued. I'd like to think that you could sort of draft back a discounted cash flow basis on some of the contracts that these companies have, like Core Scientific is a standout, right? Bit Digital and their white fiber business, that might be an also run. But with IREN, I think they talked about having almost 5,000 GPUs and generated, I don't know, maybe $2 million in the July month, I think is what I saw. It'll be interesting to see how consistent that is and whether or not they're able to land an anchor tenant. I think that's really important. Whether or not the contracts are long or whether or not they're short, kind of like AWS. Hey, rent a server for a month, and this is what it costs on an hourly basis. So there are lots and lots of variables, Anthony. I don't think there's a real straight answer, but I do see it sort of clouding as these companies morph, because it's not necessarily clear what that company will evolve to become, right? Like you said, the guys at Riot said, we'll never do HPC. Now they're doing HPC. They're embracing the way that technology and the value of power has changed.
Yeah, and actually, just take that a stage further then, we had Ben Gannon on a couple of months ago for a podcast, and we asked him, as a Bitcoin miner, how long's the Bitcoin mining industry got left for the public companies? And he said 2 to 3 years. So that's a CEO of a Bitcoin miner saying that. We had Dan Roberts on saying, if you had the deal come through for HPC, what happens to the miners at Childress? We'll replace them all with HPC. They're quite prepared to go where the best return is, and so I suppose the question is, what do you see at the moment in the Bitcoin mining industry? Is anything actually whetting your appetite in that particular industry, or are you sort of like more than happy looking at the companies that you're covering at the moment and seeing? I know that quite a few of your companies are moving into the HPC space, albeit Mara haven't announced anything, and they pretty much said they're going to work with HPC to deliver some sort of, the load basis where they can utilize power when the HPC data centers aren't utilizing it. But them and CleanSpark have said we're going to stay effectively Bitcoin miners. What do you see of the industry at the moment, and do you have a different slant on those companies that are moving towards HPC, or is that a bubble, or is the demand real? What you're expecting from your opinion?
Okay, maybe I'll start at the end. There are a string of questions there, boss. No, I don't think it's a bubble. I think the demand for HPC AI is going to continue to grow. Like any business, there'll be cycles. and maybe we're going through an overbuild cycle now. Maybe we're going through a hype cycle now. Maybe good managers prepare for that. They prepare their companies and ensure that they can weather any storm should it come. As far as Bitcoin mining and its longevity, I think it's really a function of power costs. And no disrespect to Ben, he could very well be right. On one hand, on the other hand, if miners are able to negotiate power contracts that can drive, I mean, you've seen Cypher, I think Cypher's power is below 2 cents, right, a kilowatt hour.
Well, we'll find out this week.
Yeah. Maybe tomorrow, right? But anyway, they're very inexpensive. And that, in my mind, the other side of Bitcoin mining, right, is Bitcoin utilization. Because Mara's July performance report actually points to how much of their rewards are actually transaction related, right? Because it's their block, because they run the pool. Yeah. And those numbers aren't even 2%. And that's a point of worry in some ways, because through the next two halvings, that block reward goes to, I don't know, like close to half a Bitcoin. So how are miners going to be incentivized and paid for the work that they do? Well, if those rewards go down, they just have to match that with costs. And I think some companies are prepared to do that. I think you mentioned Mara. I think they're a standout. They're looking at that evolution just as I am, right? For other companies like CleanSpark and maybe even Bitfarms, they've got many locations, static kind of power arrangements. It's going to be very difficult for them to negotiate their power costs down. So they'll have to rethink how that power is used. The other side of the equation is something that Fred Thiel talks about, and that's sovereignty. Like, there are a lot of companies in the US that have a lot of vested interest in Bitcoin. Forget Saylor, just everybody else. I mean, I think Riot is close to 20,000, Mara has over 50,000. There are a lot of companies that have lots of value in Bitcoin, and they want to make sure that network stays secured. So a question, I mean, I don't see any issue in an autocratic nation. If you look at China or Russia or Kazakhstan, they're going to run Bitcoin mining, and it's not going to matter. It's not about the economics so much. In the US, I think it's a different story, right? Because these public companies are, they're held accountable to their shareholders. If the economics don't support their existence or their growth, then things have to change. And I think many shareholders realize that. I think that's what instigated the change at Riot. I think that's what changed the thinking at Bitfarms. Now, you go back, I remember having lots of heart-to-hearts with Jeff Morphy, and this wasn't even that long ago. Kevin, I've presented HPC to the board. It's not something that they're interested in doing. Then they got pressure from Riot, right? And they make the Stronghold deal. And they start thinking a little bit differently about how to use that. The Pennsylvania PJM grid is wonderful, and they have an opportunity to use that power. And I think they've enlisted a company to help them develop the Panther Creek site. Anyway, I know it's long-winded. I don't know if I really got to the answer that you were looking for, Anthony, but
Full of Paul. And the only reason I say that, Kevin, is we've already had out a number of earnings releases, and once you take away the Bitcoin FASB valuation that these companies are allowed to add now, you had Mara had effectively a 400 million loss, and Riot a 300 million loss. And so, if they can't produce a net profit from what they're doing, and this is, you mentioned about how they're going to reduce costs. Energy is one element of that, but fleet efficiency is the other side of that coin, and they have to invest tens of millions of dollars to replace machines every few years as the efficiency drops down. And one of your companies, Dede, are looking to bring out a machine next year that's going to be 5 joules a terahash, which is effectively about a third of the efficiency that the best machine on the market is at the moment, which is the Bitmain S21X.
That's the target that they have for the chip, right? So when you put that chip on a board and you put that board on in a box, your efficiency is not going to be there. It'll still be fantastic, and I applaud the way that they're thinking about that chip design. But this is the argument that I had with Harris. It's like, well, wait a minute, Harris. You go back to the space program, right? The space program in the US, which was really sort of the genesis of the semiconductor industry. The idea was to drive as much computation as you could and use as little amount of power as you needed, because batteries were heavy and they had to put all that stuff in space, right? Then we see the advent of the mobile phone business, right? You've got some of the greatest semiconductor designers in the world. And if anything is critical to battery weight and power, it's the cellular phone. And yet we still haven't seen the evolution of technology that Harris speaks to, which is sort of recirculating that power through a semiconductor. So I cannot wait to see how this works, whether or not they'll get to where they hope to get to. But to our earlier discussion, really, it's all about what happens at the semiconductor level. Mm-hmm. And I agree with you 100%, right? It's hugely capital intensive. You've got to continue to push your efficiency and your cost. When you look at companies like Mara and Riot, though, it's not just power, right? I mean, there's sizable SG&A expenses at both those shops. So, yeah, I mean, it's going to take some rationalization or some severe moves on the power side to get to where these companies continue. And hey, listen, I remember a discussion, I'll never forget a discussion I had with Peter Lynch at Fido. He's like, Kevin, is that company generating cash? Are they generating cash? Right? That's what it is. Are you generating cash, and will you generate cash tomorrow? That's all it is.
Hey, speaking of, use the word accountability to shareholders and SG&A costs or costs in general. One of the concerns out of the retail community, Kevin, is the increasing or growing stock compensation or executive compensation in the Bitcoin mining space. So we wanted to get your thoughts from the Wall Street perspective. Is this something you guys are concerned about? Is it something you're watching? And what can you do about that? I know Riot has committed to making some drastic improvements in the middle of next year. Where do you see this going?
I think it's a great question, and it's pretty clear that you've seen activist interest, right, from institutional investors in changing companies' direction. I'd imagine they'd be concerned about comp levels too. It was interesting because I looked at Griffin's numbers, and they're being they're merging with American Bitcoin, right? But there was a really high stock comp expense for the March quarter at Griffin, and that's kind of when these deals were being architected. So in some ways, there's a little corporate greed, I'm sure. We talked about this a little earlier, and we talked about Merrick Okamoto's pay package at Mara when he hit all those targets. I fully am in favor of executives getting their just desserts on hitting their milestones. I think that's so important because they're taking their constituents with them. They're taking their employees there. They're taking all their shareholders with them, and there's a lot more, I think, in just honest human value than there is in paying an errant baseball player $450 million for 5 years, or actors $50 million, right? I mean, they're creating entertainment value. I get it, right? But corporate executives are creating value for an entire group of constituents.
I think nobody's saying they don't deserve to be rewarded. I think the question is more along the lines of how much should you be rewarded?
Is tolerable.
When you look at let's be honest, Ken, we look at the base salaries for all these CEOs. They range from $500,000 to $1 million a year. The base salaries. When we see the packages, it ends up. We've seen two now that are just a million short of 80 million. And
Right.
then you've got Fred, who's the chairman and the CEO, so he effectively does two roles. His salary package was 42 million, which was just below the CEO of Nvidia. Now I've got shares in Nvidia, and my shares have gone up 1,200% in the last 5 years. So I'm very happy that he gets paid accordingly. My shares in other companies, in mining companies, have gone up nowhere near that, and I'm just
Right.
wondering where's
So
where's my return? I
right. Yeah,
invested my money in that company.
I agree with you, Anthony. I agree with you. There has to be a reckoning, right? I mean, comp should follow performance. Getting back to what we were saying about constituents and the value that's accorded to everyone who's involved. So I agree with you. I just don't know how it's going to play out.
Yeah.
It would not surprise me that there's some pushback and some changes made. You alluded to that.
I think the shareholders of both Mara and Riot actually voted against the comp packages in the last two voting rounds. So maybe that gives the companies a chance to reflect on that. And don't get me wrong, perform and do well, and the share price does well. 100%, absolutely. But I think the retail shareholders, they sense it's like, is this a short? You've just highlighted it with Griffin. You said exactly the thing there with Griffin. It's short term, so they gave themselves a whopping compensation, knowing it's the last one. That's the last one they're getting, because those directors at Griffin probably won't be with the American Bitcoin mining company when ABTC goes public. So they'll walk away from that deal there with their last, big hi ho, and they haven't delivered for shareholders at all in terms of what they said they were going to, in terms of achieving this 10 exahash, blah blah blah. We spoke to Rob Chang when he was CEO, and then we obviously spoke to subsequent senior members of the team at Griffin before they went into this sort of like a merger and acquisition deal with ABTC. I mean, great that the valuation of Griffin at the moment, I think last time I looked, was like over $100 million, and that's supposed to represent, is it 2% of the new company?
Correct.
Which suggests that American Bitcoin mining company is going to be valued at the same level as Mara, because 2%. If 100 million is 2%, multiplied by 50, you get 5 billion. That's about Mara's valuation today, 5 billion. So I don't know. I mean, that wasn't a question to argue. Just what I'm saying to you, just in sort of the fact that this compensation, and not just compensation, it's the whole salary packages. When you start with the basic and you have cash bonuses and you have compensation and other types. Dividends are now coming into it as well. The shareholders would love dividends, but shareholders aren't getting dividends. But some of the senior directors.
I'm not a big fan of dividends.
No,
the company's got to pay tax on them, and then you, as an investor, have to pay tax on them.
And the companies are growing, so at the same time, use that money for growth. Yeah.
Hey, two more for you while we get to the end of the hour here. I wanted to ask, based on your observations, we've talked about a lot of the miners we cover on the channel. Where do you see the most opportunity right now if you were to select a top pick, whether that's based on your firm's price targets or your own personal understanding of the space? But I'm curious, in your own opinion, who's a standout?
Well, I like Mara and I like Bit Digital. Those are the two that we picked as top picks in the early part of the year. And the rationale for me is pretty simple. Fred, the professor, I think has a unique perspective on driving his power costs down. And I think we'll see, he spoke a lot to it on the most recent call. Not too many hard examples just yet, but I think we'll start seeing them play out where Mara is actually in bed with a power generator and working to balance a load that might otherwise be going to an HPC or some other variable use. So I think that'll be instrumental in addressing how Bitcoin mining's longevity in general, getting power costs down, and transitioning the business to other revenue streams. And in Bit Digital's case, they're in the process of spinning out white fiber, which I think they'll retain 80% ownership of. I think that's what the deal is. The thing that's interesting to me is they're moving to become an Ethereum treasury company, right? They're still running their Bitcoin mining, which is nice, and we see them doing okay with that because they've got some great hosting agreements. And then what's really neat about Ethereum, you make your investment, right? And you guys know this, right? It generates yield based on staking. Yeah, versus Bitcoin mining, you make these big investments in rigs and they become obsolete over the next 3 years.
Although we're starting to see some types of derivatives come out now in terms of those that have got significant Bitcoin yield, you can actually make it work for you in terms of getting a return on that. And we're seeing some of the miners starting to venture down that route there, especially if you've got 50,000 on your balance sheet, you better be doing something with that 50,000 Bitcoin. Same with Riot as well, 20,000.
In Bryce's neighborhood, there's a company called DeFi Technology, which has a Bitcoin ETP that generates yield based on its work with the core chain. So yeah, there's an opportunity to do it. It's just counterparty risk, and it gets, the financial engineering becomes a little more complicated.
Final question before we hand it back over to you for final thoughts. I suppose one of the biggest, because of the volatility we've seen in the Bitcoin mining space, and it is a volatile space to be in. I mean, if anyone, if people are still holding shares from 2021, they're probably, wiping their eyes on a daily basis as to where some of them stock prices of these current miners were back 4 years ago. As a sort of an investment bank, you probably own shares in some of the stocks that you cover as well. What do you look for in terms of a sell strategy? What do you when you see signs that the bank's ready to take a lesser part in a company? What are the signs that you look for that? And to help retail investors understand what they should be thinking about as they go forward with their investment.
Buying is easy. Yeah. It's easy to drink the Kool-Aid, get sucked in, think, oh man, we're going to the moon on this one. Selling is difficult. Just to set the record straight, though, I don't own shares.
Not you personally, about H.C. Wainwright.
Yeah, correct. Because it presents a conflict of interest. So again, I think it gets back to the cash generation question, right? And how you balance depreciation in that calculation is really interesting, right? Because you look at free cash flow and you back out your CapEx, and you take operating cash flow, back out CapEx to look at free cash flow. And the question in my mind always is how much of that depreciation is CapEx, right? And how much you want to really extract from your operating cash flow calculation. So I think that's the way to look at it. I think it's about how mindful management is on the levers that they have control over versus the ones they don't, and how to position themselves in a way that gives them an opportunity to take advantage of how technology evolves. That's one of the things that you got to give Fred a lot of credit for, right? He's looking for ways to get those energy costs and push them to zero. He knows that's the linchpin.
Yeah, and actually, Fred, I think a couple of years ago, said on a podcast on television that he expected either the energy companies to take over Bitcoin mining in the next 5 years, or the price of energy would need to fall significantly closer to zero to make it a viable business. He could see this a couple of years ago. So it's interesting that they haven't sort of like started to look outside of the mining. There seems to be still full blown in going down the mining route. They've got this target of 75 exahash, and it looks like they'll probably achieve that at the end of the year.
That's just the near term target. That's just the near. It's really interesting though. I think they had almost 60 exahash, right? Energized, and generated 703 Bitcoin in July versus your point earlier, IREN.
IREN just 724.
Right. It's at 728. On 45.4 exahash. Yeah. Very, very interesting. So you're going to see more and more and more of those vagaries because companies are going to mine when it makes sense. And that's going to be a function of power costs.
But the other thing, you're quite right. The other thing there is you just mentioned the key constituent there. It doesn't matter how much Bitcoin you mine, it's what it costs you to mine the Bitcoin. And IREN have just achieved 76% margin on that month of July. So, I mean, I didn't see it coming. They effectively beat all the miners in July in terms of every metric. So that's going to be an interesting article for me to write.
Not to mention this transition into HPC. So the Roberts brothers are looking around the corner.
They certainly are.
Have to give them credit.
And I'm sure they're looking at the share price today too. It's up 10% as we're talking about IREN right now. So a great way to end out the hour. Hey, Kevin, this was awesome. I appreciate the transparency. It's so nice to get your angle on all of this stuff that we talk about on a day in, day out basis. We appreciate you coming on the channel. Look forward to having you back, but we wanted to give you the opportunity just to close out. If there's anything you wanted to bring up we haven't touched on.
No, I know you guys gave me a good list of topics to banter about. I think we beat many of them to death. I think the real takeaway is that, no, I don't think Bitcoin mining is dead. I think there'll be a sovereign issue, and I think there'll be many. Listen, never discount the cleverness in management teams in free economies. It's incredible the things that have come to pass. Everything from walking on the moon to generating 75 exahash. It's just I can't see Bitcoin mining going away. It's just going to be refined, and how that evolves, I think it'll be a lot of fun to watch. And I think the key is to keep your eye on how particular companies are managing their power.
That works for us. We'll be keeping our eye on the sector right alongside you, Kevin. Thanks again. You guys, if you have any additional questions, leave them in the comment section below. Let us know what you thought of today's discussion and our commentary on the miner picks. If you're still watching, hit the like button. Feel free to subscribe. We'll see you back here later.